today, where were the gains and losses seen, and what really happened to your investments in the stock markets. To discuss all of this and much more, I have a very special guest joining in. Mr. Kranthi Bathini joins in from Wealthmills Securities. Welcome, sir, to the show, and thank you so much for taking the time out. Well, yet another day, a start to a new week, and it's been on a down wicket as well. We've seen the Sensex really slipping away. In fact, we did manage to cut some losses towards the end of the session, but Nifty barely holding 16,300 today. What did you make of the overall trading action today, sir?
Sakshi, yes, of course, during the trading session, we could be able to witness some kind of recovery. But technically, market looks very weak right now. But we need to wait and watch how the FI participation that's going to be. And we need to keep in mind, we have the large IPO that's going on right now, the big boy LIC. So some kind of money has been moving out of secondary market to primary market, or the allocation that was there for the primary market is getting stronger in primary market due to the LIC IPO. So this is one reason we can see some kind of lukewarm movement in the secondary market right now. But Absolutely. Overall, the market picture looks strong. We can see this market definitely a buy on dips market. So investors can use every dip in Indian markets for the improvement of their portfolio and strengthen their portfolio for a longer term basis.
Absolutely. Since you talked about LIC, I wanted to comment on that. Today is the last day of subscription for all those latecomers still thinking at the last minute whether to subscribe to the LIC IPO or not. Well, all the categories are now filled up, subscribed fully as well. And now they're getting the extra subscriptions too. How are you advising your last minute calls from the clients as to whether they should go for it or not? We have time till about 7 p.m. today.
Yeah, Sakshi, LIC is the stock to be in the portfolio for a longer term basis. If the investors are looking for just listing gains, they're just trying to test their luck in the market, whether they get the allotment or not. But given the prospects of the Indian financial sector is concerned, LIC is the stock to be held in everyone's portfolio.
Okay, understood that. Also, since we're talking about the big heavyweight companies, let's talk about Reliance Industries too, sir. On Friday, we saw the company report decent set of numbers on all accounts. It did post profits and revenues. So good numbers coming in there. But in today's market, we actually saw Reliance Industries slumping almost over 4%. So could you help us with the chief reasons behind the sharp fall today we've seen on Reliance Industries, and what are you advising clients to do now?
Sakshi, Reliance Industries, after giving a very decent set of numbers and the revenues getting into $100 billion clip, so the numbers looks encouraging. But what prompted the stocks to come down today is some kind of profit booking, what we are witnessing after the results. And one need to take into consideration the stock has run up 20% in past 2 months. So some kind of due to the volatility in the global markets and also coming the kind of volatility what we are witnessing in the Indian markets right now, some kind of profit booking that's taking place in Reliance Industries at higher levels. That's what we witnessed. But the investors who have been waiting these kind of dips in the market, definitely they can start buying Reliance Industries at every dip. We are quite positive on the prospects of Reliance Industries is concerned. Every dip can be a warranted buy for Reliance Industries.
Okay, every tip can be bought into for Reliance Industries, long-term buy opportunities right there for investors, despite the kind of fall that we've seen today. Apart from this, we also saw overall the market sentiment was broad-based on a sell-off, be it the mid-cap, the small caps, the large caps, and all the sectors of the Nifty as well. Barring IT, they all declined. So what's fueling the kind of move that we are seeing in the IT? Is it the rupee weakness that we've seen, rupee slumping to all-time low levels, and does it brighten up the prospects for such export-oriented sectors?
Definitely, Sakshi, always rupee weakening helps the export-oriented sectors, especially IT is concerned. But some kind of profit booking that's taking place in IT also across the globe. It's not only in India. Despite of good earning visibility in IT, but the prime reason is what the kind of that corrections what we are witnessing from the global cues that has creating a negative impact on IT in the medium term. But investors, they need to choose where they need to be, whether to be on the large cap IT or mid cap IT. the choice is the investors, depends upon their time horizon and the risk appetite. Definitely, IT is the space we need to watch. And the given the kind of rupee weakness what we are witnessing, definitely will help the IT as a sector to be in.
Okay, one more stock I wanted to speak about, and that is the newly listed stock today, Campus Activewear. It listed on a premium of 23%. I remember speaking to you even before the IPO came, and you were suggesting that the company has good fundamentals and can be looked at. And we've also seen some good listing gains coming in for the company. For investors looking to now invest post the listing who had not got the allotment, is Campus Activewear a good stock to look?
So actually, there is no reason to jump immediately and buy in this kind of market volatility, and taking a new boy in the portfolio is not a good reason for the investors. Probably they can wait for the 1 quarter results. And normally what we witness is after a phenomenal listing gains, and phenomenal listing gains is in this kind of market condition, 23% return is a very good return for the traders and investors who got the allotment for the IPO. So they can take some profit from the table at present, and they can wait, because every listing what we are witnessing is after 30 days, there's a cool off period for every IPO. So because of the conditions of the market, right now they can take some profit from the table and wait for the price to watch further.
Okay, understood. So Campus Activewear, those looking to enter now post the listing should wait for some cool off period to happen. For those who already got the allotment, are advised to book partial profits and continue for some more time to see how the Campus Activewear share is really progressing at this point in time too. Anything else that you would like to suggest to all the viewers and investors looking at the current volatile environment in the markets and confused about how to approach it?
Sakshi, see, what we are witnessing is a synchronized global inflation across the globe, and also the geopolitical issues that are keeping the large institutional investors away from the equity markets, and also rising bond yields, making the institutional investors, FIS, a little bit of nervous in the medium term. But the retail investors in India, those believe in the India's story, definitely they can use this dips and volatility in the market as a good buying opportunity to participate in India's theme and growth story.
Okay, understood that. Well, on that note, thank you so much, Mr. Bathini, for being with us and sharing all your insights and thoughts on the markets and the way investors should approach the current environment too.
Thank you, Sakshi. Always a pleasure speaking to you.